I'll talk maybe specifically just through the end of the year, looking across the various sectors. Some of my best ideas are not just commodities which we would go long. I still think that in the energy space, crude oil still has some room to move lower. Within agriculture, cotton is one that can move lower. Within the livestock space, cattle is a commodity that can certainly move higher. And within the metal space, we also would like palladium and platinum, so the platinum group metals to move higher as well.
Well, I think that we tend not to think about, oh, this commodity is going to offer the best return, so much as which commodities do we feel are structurally the most advantaged. And so really I think where you find the structurally most advantaged commodities are the ones where there's limited slack in the supply system in order to satisfy a surprising shock to demand. I guess I would highlight that in the metals space there's a couple of markets such as tin and platinum group metals where we see significant risk of sharply higher prices because of inadequate capacity. Looking outside the metals markets, we see that food row crops such as corn and soybeans, probably especially soybeans, are probably the most fragile in terms of having the least resilience to either a negative supply shock or a positive demand shock.
I think, however, lean towards political instability in the Mid-East continuing and the possibility of either too much rain or not enough next harvest season in the US or Australia. So one's weather dependent, the other one's political, but over time they're repetitive and impact on commodities.
Well, in terms of the energy commodities, I think probably oil has got to be one of the strongest ones. Gas is mixed. I think in the US it's very hard to see that much upside for gas in the US just because of the amount of shale that can come on. But I think if you're looking globally, certainly global gas prices are probably going to go up, both because of their indexation, I would say, to oil, as well as just becoming tighter on the supply and demand fundamentals with more demand coming on stream and not that much supply.
The key commodities will be those where supply is limited in an environment where demand growth is more moderate than maybe we've seen in some of the previous years. So for 2014, we would see that to be crude oil, the platinum group metals, lead and potentially zinc.
Coming to individual commodities is certainly hard to answer. I would rather go down the route of how to invest into commodities. Is it the passive, directional, long-only way? Or is it an active approach using certain arbitrage elements, using certain intra-commodity trades? And I believe that going down the route of active kind of assessment of the situation, which means long-short, and sometimes kind of building a multi-strat long-short portfolio, which means not in a particular commodity but across commodities, trading futures options, but also implementing a certain equity long-short strategy. Because at the end of the day, the mining companies, the E&P companies, they will basically benefit from fluctuations in the underlying commodity prices. So if you blend these two worlds, the commodity trading themselves and the equities of the producers, into a strategy, I believe that going forward you can make most of money in this kind of strategy.